Wouldn't surprise me at all if it cooled off, but it also wouldn't surprise me if it continued. Bitcoin is much more volatile, and history shows when it does go on these runs, that tend to you get some FOMO, and it can go for quite a while. I mean, my ultimate target on this cycle, and I measure the cycles in kind of 4-year terms, which a lot of people do,
Mhm.
kind of based on the halving. My target for this cycle, the top is closer to 200, maybe a tad above it. So we're not, we're halfway there, a little under halfway there.
After over a full week of pent-up excitement and expectations that Bitcoin, the world's largest cryptocurrency by market cap, will cross the $100,000 mark. The cryptocurrency is currently trading below $94,000, a crucial resistance level that has the market divided over what lies ahead for Bitcoin in December and into 2025. According to Jeff Kendrick, the head of Standard Chartered Digital Assets Research, there might be more room for Bitcoin's price to drop further to around $88,700 before prices pick up sharply again. Kendrick took to his X account on Tuesday to discuss the impact of the new Treasury Secretary on Bitcoin prices and the overall U.S. economy. His post reads, "I think the catalyst yesterday for Bitcoin's price decline was a post-Besant announcement reduction in U.S. Treasury term premium." He further noted that U.S. Treasuries have rallied on Donald Trump's pick of Scott Bessent for the U.S. Treasury Secretary, with yields dropping by more than 10 basis points across 5 to 30-year maturities. Popular investment manager and sound money advocate Lawrence Lepard agrees that Bitcoin's price could tumble further in the coming days. His estimate is slightly lower than Kendrick's at $73,000. However, he is certain that the decline will be short-lived and the bull run will progress further in 2025. During a recent interview with David Lin, Lepard gives a bullish $200,000 price prediction for Bitcoin by 2025. Lepard, a renowned sound money advocate, believes the day of reckoning is coming for the stock market and the banking industry. When it happens, Lepard believes Bitcoin's price will skyrocket further as investors scramble to seek shelter. As he discusses his outlook on the U.S. economy under the Donald Trump administration and his predictions for Bitcoin and gold, please watch, share, and like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and enjoy the video.
These guys are thinking correctly and cutting expenses. They're thinking correctly about that. But the point I would make there is that, we spent 6.75 trillion last fiscal year ended September. 80% of that is Social Security, Medicare, interest, and defense. So, when they talk about taking a hatchet to government and cutting government, unless you're going to touch those four areas, and they might touch defense a little bit because they might be able to end the Ukraine war, it's going to be hard to cut. So the remaining 20%, even if you take 30% off that, that's $270 billion a year. The deficit last year was 1.8 trillion. The run rate on the deficit this year is 2.4. So, the deficit's a real problem and the debt growth is a real problem. So they're going to have their hands full.
It's a real problem for, I guess, the economy overall, but could it be a boon for certain assets?
It could be. It could be indeed, especially if they end up going to yield curve control and printing money to address it. And I think that's what's going to happen. It's obviously today isn't reflecting that because gold's down $80 and Bitcoin's soft and so forth. But, what I've been maintaining up until today, and I still do longer term, is that we're in a sovereign debt crisis. The fiscal situation is out of control. And you're really seeing this when you compare, the last 3-year performance of Bitcoin or gold to debt. And I just did some charts on this, which are on my Twitter feed for this New Orleans conference. In gold terms, compared to the bond, the gold's up 170%, in 3 years, and Bitcoin's up 3,000% in 3 years. And what this tells you is that the bond market is, in my opinion, in the process of failing. I mean, one thing that's interesting, as I know, is that they cut interest rates, the Fed cut interest rates, and yet, the 10-year has gone up 75 basis points. So that's not supposed to happen. And it tells you that the Fed is probably too loose. And yet, because they are, the ones setting the short-term rate, and Janet's using the short-term market to fund a lot of the debt that's rolling over, they're under a lot of pressure to keep cutting rates in an effort to, make the U.S. funding costs not go up. because interest expense is running at a $1.2 trillion rate. They certainly don't need that to get worse. They've got a lot of things they'll do, though. I mean, Besente's got an interesting trick up his sleeve. He's talked about maybe, Powell's term doesn't expire until early 2026. And Besente's talked about maybe appointing his successor, but, announcing who his successor was going to be beforehand and letting that guy give speeches. And so, in a sense, it'd be 1 year out forward guidance of what it's an interesting concept. The Fed and the Treasury are going to quote unquote have their hands full, in my opinion, in the next 6 months. And particularly if something happens to the stock market. I mean, for those of us who are market historians and have looked at the market, valuation wise, I mean, it's hard to overemphasize how extremely overvalued this is. This is like in the top 1% of valuations ever. It's more overvalued than 29. It's more overvalued than 2000. I mean, there's a lot of good analytical work out there that just shows that the free money that we had, the ZERP and the low interest rates that we have blown an enormous stock market bubble. And if nothing goes wrong, valuations can stay stretched for a long period of time. But if something goes wrong, the stock market turns. A lot of people are in the stock market. Everyone bases their economic spending patterns on how the stock market is doing. And if for some reason, for whatever reason, heaven forbid, the stock market turns, it's going to make this entire situation. It's going to turn it into a mess.
Lepard is predicting a day of reckoning for the U.S. stock market, which he describes as critically overvalued and on the verge of a massive bubble burst. Lepard warns that the current situation is worse than the dot-com bubble. He expects that the collapse will be just as bad, taking out tens of trillions of dollars almost overnight. When the collapse begins, Lepard predicts the Federal Reserve will be forced to come to the market's rescue by printing more than it has ever done in history. Lepard describes this as the big print, warning that it could very well be the end of the traditional financial industry as we know it. As catastrophic as he expects the collapse to be for stocks, bonds, and other traditional financial assets, Lepard is certain that it will be great for Bitcoin, gold, and other safe haven assets. In his words, the days of the fiat monetary system are numbered, and Bitcoin will serve as a solid foundation for the next monetary system. Here are more clips from the interview.
The more important thing to me that I found so interesting was just how strong and persistent the breakout was. And for those who've been following it, Bitcoin had kind of been trading sideways for quite some time. And there was a joke on Twitter about the 58K club, and 58K was the bottom, and kind of high 60s, 70, low 70s was the top. And I always sensed that when it did break through the 73, 72, 73 area, it was going to squirt higher. And boy, it sure did. It went it kind of straight lined from 70 something to 99, as you know. Wouldn't surprise me at all if it cooled off, but it also wouldn't surprise me if it continued. Bitcoin is much more volatile, and history shows when it does go on these runs, that you get some FOMO, and it can go for quite a while. I mean, my ultimate target on this cycle, and I measure the cycles in kind of 4-year terms, which a lot of people do, kind of based on the halving. My target for this cycle, the top is closer to 200, maybe a tad above it. So we're not, we're halfway there, a little under halfway there. But obviously today it's getting hammered, and it wouldn't, it's not unusual either for things to break out to go back and test the breakout point. So I think I'd be very surprised if it went below 73. I'd actually be surprised if it went back to 73, but could it retrace a bit of the recent gains? Sure, it could. A lot of it depends on how many of the buyers in the last, month or so have been doing so on leverage and have been doing so with speculation. When they suddenly realize that 110 isn't imminent and they get scared, they're going to bail. And so we'll have to go back to 90 to build a new base at 90 or something. I don't know. That's just a thought. I mean, it's very hard to tell. And I never trade it. I never sell it. I just have my Bitcoin, and that's that. I view it as a long-term store of value, very much the way I view the gold that I own as a long-term store of value.
When you say 200,000 as a cycle top, when did this cycle start for you?
It kind of started when it was kind of trading around 50. I mean, the bottom was 15, as you know, after FTX, but it kind of based for a number of years around 50-ish, 50, 58. I don't have a chart right in front of me, but and the history of these cycles is they tend to go to 4, 5, 6 times, the base. So that would imply that we could get to, 160, 200, maybe even high as 250 or 300. I don't know. Then it would be quite extended above its 200-day moving average, and it would be quite extended above the power law model, which I think has validity because backtesting the power law model has described 97% of the movements. So, it's the thing I think people have to keep in mind is that it's a volatile asset with a strong bias upward. And I've always recommended people have a little bit of it, or the only wrong allocation is zero, and you should dollar cost average on your Bitcoin purchases. I mean, I was buying it at 15, buying it at 30, was buying it at 50, was buying it at 70. When I get some more money, I'll buy it at 90. I think it'll be much higher in 5 or 10 years, but between here and there, it could go up and down a lot.
Okay, so basically it'll 4x from its bottom in the next cycle. What's your thesis there?
Because that's if you go back and you look at prior cycles, that's kind of what's happened. In earlier cycles, it was actually more than 4x. And it's not just the X, it's kind of the standard deviations off of the base. This is the power law model. But there were some of the earlier cycles you actually got like 9x off the bottom or off the base. But it's, with each, as it grows up, as more people hold it, as it gets more widely distributed, you see that the ups aren't as bad and the downs aren't as high and the downs aren't as low. The first drawdown I think was 90 some odd percent. More recent last drawdown I think was 70-ish. And I expect these drawdowns to move to the 60s and 50s and 40s. I mean, over time, as it gets more widely distributed.
At the moment, the United States has about $200 trillion in funded and unfunded liabilities, backed by $5 trillion worth of assets, dwindling tax revenues, and rapidly increasing debt expenses. That's why people like Lepard, who understand both sides of the coin, the fiat side, which he describes as nothing but credit, and the Bitcoin side, have repeatedly warned about the dangers of completely relying on the fiat Ponzi scheme. While Bitcoin has a limited supply, is not controlled by any single person or entity, and is backed by the most powerful computer network in existence, the US dollar, a suitable representative for the fiat system, has an unlimited supply, is centrally controlled, and is backed by nothing. Bitcoin has been one of the best performing assets against the balance sheets of central banks, especially the Federal Reserve. The more these banks inflate and devalue their respective fiat currencies, the better Bitcoin performs when compared to these currencies and balance sheets. Lepard is certain that when this next round of printing starts, the Federal Reserve's balance sheet will more than double from its current state to over $20 trillion, spurring a rapid increase in the price of Bitcoin and other cryptocurrencies. Please share your thoughts on Lepard's price predictions for Bitcoin, gold, and the US economy in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.